Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. We'll talk about the morning vid I released towards the last segment of this video. Today we saw markets continue to recoil after an extremely volatile week. With inflation at 8.5% year over year and the Fed announcing a 50 basis point interest rate, even the most experienced investors were caught off guard. The whole notion that any of these changes are somehow priced in or already embedded in prices is ridiculous, and this week was further proof of that. If you have been trading for some time, you will know that there has been a notion that the Fed is here to help out companies and individuals during turbulent times. That they are supposed to lead the way and ensure the economy runs smoothly, and though that may be true on paper to some degree, the Fed is not your friend. Let me explain this a bit more. The fall that we saw in the markets this week wasn't just because the economy was bad. The economy has been crap for years now. The one and sole variable that has changed and thrown everything upside down is the eroding trust by investors in the Fed's ability to effectively turn things back. What we are seeing is a huge shift in investor confidence in the ability for the Fed and the government to take the reins of the current situation and lead us all back to a balanced economy. Let me tell you something, if you think what happened this week was extremely bad, then buckle up. This is nothing but an appetizer of things to come. The only saving grace this market has had in the past month has been the bullish earnings report of Apple and Microsoft. Had their earning reports been anything less than stellar, the S&P 500 would have already plummeted below 400, as investor confidence would have behaved just like a father when he goes out for milk and never to return. So again, let me emphasize that what we are seeing is investor and market confidence in the Fed's ability to do their job effectively decreasing, and that is why we fell. Next week we have a whole myriad of important things that can make for another turbulent trading session, but the typical Sunday video will be devoted to going over that. So you might ask, what changed so much that investor confidence is falling back so rapidly? Well, believe it or not, as bad as Ukraine has been, I don't think it has had any real effect aside from making the volatility by which we trade incredibly high. Yeah, the energy sector exploded and a lot of changes happened fast, but there was nothing that fundamentally damaged in our economy, and as a result of that, it is inaccurate to blame Russia for what is happening here in America. Instead, what is causing investors real grief is the state of the economy and the growing amount of evidence and data that suggests a recession is looming. I made a video 2 months ago or so talking in great depth about the stagflation, what it was, and I argued we were in the beginning phases of one. For those that are relatively new, stagflation is the combined number of high unemployment, persistent high inflation, and stagnation. As weeks turned into months, the data that comes out continues to pile up and give this belief more and more credence, which has began to fuel further fears of a recession. We have begun watching Treasury yields invert, inflation skyrocket like it's living its own little moas. We saw oil price pressure blow up, but one thing that really caught my eye was when the Fed admitted that real growth domestic product had gone negative. When this number goes negative, it's time to brace for impact. The dire events that are happening back to back are not even happening quietly, sneaking in and unseen. They are full-blown out alarming reports that we have somehow gotten so accustomed to that it is becoming almost like background noise. Big money is smart de facto, otherwise they wouldn't be big money. They know and have given the Fed leeway and time, but the Fed's attitude and resolve have been less than satisfactory in even slowing down the progression by which we sink. As such, big money is taking the money out of the stock market and putting in housing or on their sleeping mattress, and that is the real reason why we fell this week. We will talk about what is to come next week on Sunday. Today, all 3 benchmarks ended red. We saw an article from Wall Street on Parade Report that Goldman Sachs says its dark pools are under investigation along with everything else the firm does. This was making big rounds everywhere, but based on my reading of the document, there is nothing worthy of attention. At the very worst, Goldman Sachs will get punished with a tiny fine and a little slap on the wrist. They will sign a document with the SEC and Department of Justice whereby agreement to pay the fine. They will not proclaim themselves as being guilty of any charge, and because of this, they will get to actually use that fine as a write-off on their own taxes. It's a win-win for them, and that is the worst scenario. To me, this article shows nothing but regulators barking loud to give the appearance that they are doing something to combat the criminal element of Wall Street. The irony lies in the fact that the SEC employs the same criminals they investigate into their offices. In fact, the current chairman at the SEC used to work for Goldman Sachs, where he made a big name for himself. I am not impressed by the SEC, nor do I think we'll begin to untap the greater mysteries that we ponder about daily about what really goes on in dark pools, but maybe I am just a cynic after all. GameStop made an official Twitter account for the GameStop NFT marketplace, so that's cool. No news came from AMC, but Doctor Strange releases today, so I am betting those theaters are going to be packed all weekend. Today, members that day trade in my Discord had a fantastic day after 4 alerts went out, all finishing extremely green, with some stocks running over 15% higher after entry suggestions were issued. Consider joining my Discord if you want to partake with us. Let's now talk about today. The Fed submitted over $1.861 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 47% of the total volume today, while dark pool trades for GameStop accounted 52% of the total volume today. AMC had a bearish performance, losing over 6% for the day. It opened around 14.65 and began dipping quickly, finding support at 13.55 before bouncing back up to 14.60. AMC was unable to continue moving up, and after a second attempt, it began breaking support walls and ended up closing 13.76, below the VWAP. GameStop had a bearish performance, losing over 3% for the day. It began dipping as soon as the markets opened from 118 to 110.50. After that dip, GME bounced back strong, running past 120.50. After a second attempt to break this resistance wall, GameStop began dipping and eventually closed at 114.70, below the VWAP. I am willing to bet many of you saw my morning video. I had to make that because, as you might now know, I have been getting relentless messages back to back from people asking me to stop making videos or calling them crap, so I was wondering if this was a sentiment that was largely shared by most. Like I said, I can and want to continue making morning videos as I have a ton of fun with them. They are fun, and I know that though they aren't too long, many aren't able to keep up with all that is happening and use them as quick informational recaps. When important things happen, I will of course talk about them, and the videos will be longer, such as today where I wanted to talk about the real reason markets fell off today. But on days when nothing is happening, I am limited to only so much content. Given that most of the due diligence is done, I can only write so much in a particular day until more and more data piles up for me to make a lengthier type of video. It isn't me just being lazy. As I showed, I am not here making this for money and could very well be doing something more financially lucrative, but this is much better. Shorter videos allow me to still have time to do other things and continue making content without burning out, but it definitely seemed like a great number of you wanted me to stop outright. Thank you for all the heartfelt comments you posted. Means a ton to me that my videos are so liked and educational to so many of you. I will continue doing them in the current format. I will try to add a little more content daily to make them a bit more enjoyable, and will shorten the amount of time I use to invite people over to the Discord, which I saw was highly requested. This way everything is balanced and I can carry about with my life while continuing to make videos without burnout. Thank you all for everything. Enjoy the rest of your day. Go watch Doctor Strange. Keep on buying the dip and to the moon.